Welcome back. You're still tuned into Trading Hour. We have lots of earnings coming through. So let's invite our next corporate on the show now. Engineers India is the one that I'm talking about. We saw revenue expand around 7% this quarter, that is in Q4. And the EBITDA margin has seen a big jump this time. So it's come in at nearly 19% versus the around 13% that we had last year. So to discuss the company's fourth quarter earnings, the order book for FY24 and lots more, we're joined by Vartika Shukla, Chairman and Managing Director at Engineers India. Ms. Shukla, thanks a lot for joining us. This is Pavitra. If I can begin by asking you about the consultancy revenue, because if I look at it, whether it's, for Q4 or for all of FY23, this part has remained quite flat, right? So can you tell us what is happening with just this part of the business? And also, how much does it contribute right now? Is it still around 40%?
Morning, Pavitra, and it's an absolute pleasure for me to be with you this morning. The consultancy business is actually maintained at that volume against stiff competition both in international and domestic market. And we have seen that in the year that we are in, we expect more order inflow from the consultancy segment to balance out. Quite true in comparison to the last year, we are down by about 7%. Last year, we were about 50-50 on both segments, turnkey and consultancy. This year, we are about 43% on consultancy. Our margins have been maintained at about 25-26% in segmental profits in consultancy. It's a high-end service. We're looking for diversification to actually grow not only into the core sector, but other sectors as well. And we see good opportunities in this financial year to actually break entry barriers and re-entry also in some of the segments that we are working in.
So then what could the growth look like for this segment, for the consultancy segment, for all of FY24? Since you are expecting a recovery to play out?
Yes. It's hard to pin a number to it, but there are efforts being made in diversifying our our sectors itself where we work. So when we look at the infrastructure sector, or we look at the steel sector, wherein we have secured some businesses now, or we look at the Middle East operations, which is highly consultancy and good, appreciation of our potential in terms of our engineering skills are taking shape. Consultancy sectors like green hydrogen, looking at energy transition, these are all consultancy sectors, and we see these are going to play out in a much larger manner in this financial year.
But you don't want to share any revenue growth forecasts or any guidance on turnkey and consultancy business, ma'am?
So in the turnkey sector, we see a significant growth. In terms of our volumes, we hope to breach the last year's order book in terms of the turnkey. In consultancy, it is more of managing the sectors that we are in as well as going outward. So it will definitely be significantly higher than last year. But I would not be able to share. These are all confidential, work in progress, bids that we have with various clients which are being evaluated. But I can share with you, I'm very confident both on domestic and international front. A good breakthrough which will come about. Maybe in 2 to 3 months' time, I would be better placed to show the result and share the numbers with you.
But you are saying that the turnkey order inflow in FY24 will be equal to or better than what we saw in FY23, which is a number of about 3,500 crore, right?
Yeah, quite confident of that, yes.
And how much better do you think it can be versus 3,500 crore?
Again, we find it difficult to share them. There are a lot of we work against competition, both domestically and internationally, and these are very confidential things. But the way we are looking at business as a whole, looking at various segments, and working in a very focused way to kind of push through our goal of our vision, our diversification, entering into sectors wherein our value is actually realizable by our clients. I think that is the main focus, and the results. In fact, this year's results are an outcome of last year's efforts. So the gone by financial year, wherein we secured an order of about 4,700 crores, is almost 3 times the previous year. So these are all, and we, at some point of time, we, projected an order book of 3,000 crore and it turned out to be 4,700 crore. So something similar is going to be actually a reality. As I mentioned, it is hard to put a number to it. Work is in progress.
Okay, sure. So we hope to have you back in 2 or 3 months, like you said, when you're willing to share a few more of those numbers. But in the meantime, your margin has also picked up a lot. Like I was saying, it's almost at 19% versus the around 13 that we had. Do you think it will be maintained at these levels for the current year as well? Do you think you can better this 19% as well?
Yes, our target is always to better the margins. And we look at some of the differentiating factors in our services to actually garner clients who are not the usual clients and those who see value in our offerings. It will definitely be maintained, and our target is surely to better it.
Okay. Particularly on consultancy, is there, can you give some color on domestic versus overseas? Where is it that you are anticipating growth, or are there any headwinds? Because your revenues in consultancy have been flat now for a few quarters now, ma'am.
Sure. We've actually picked up. If you see, looking at the international front in the last year's order book, it was about 14% of our orders. And in the current financial year, as we speak now, it is about 30% of our order book, order inflow. So we have definitely picked up the volumes in international market. And I see a huge kind of impetus to the projects there as well as the where we will find a breakthrough. And in the domestic sector, there are also some large projects where we see consultancy opportunities, both in the petrochemical area, in the area of transition, in the area of refinery operations as well. Internationally, we also see business opportunities in the fertilizer sector. We've already got huge orders in the fertilizer sector, which is another sector where we have broken through the barrier in terms of our competitors who work in that area. So by and by, we've also broken through the steel sector to work with one of our clients to put up their facilities for DRI gas. So there are breakthroughs which are going to, magnify in terms of volume and show in our both order inflow as well as our top and bottom lines.
Very quickly, ma'am, you keep saying volumes have picked up. Is pricing under pressure? Because overall your consultancy revenues are down. So if volumes are higher, is it because your pricing is a bit subdued, or there is some weakness?
I would say both. See, when we are in a competitive environment, we need to work on both the volumes, because it helps us get exposure to various clients. And when the client sees our value or the sector sees our value, we have repeat clients as well. So it's important to grow in terms of the horizontal growth, in terms of sectoral growth, as well as face competition and win competition. So the winnability part obviously needs to have pricing right. If you don't have the pricing right and you're out of the business itself, you have nothing on the top, nothing on the bottom. So we do both. And if you compare our margins to the other players in the sector, we are far better than a lot of players in the consultancy segment. In the total volume of our businesses, the high-end engineering that we do, or the capability that our engineers have to actually enter into a new field, is actually unparalleled if you compare EIL with any other company globally on the engineering map.
All right, we got that. Thank you very much for taking out the time and speaking with us today on your outlook. That is the management of Engineers India, sounding quite confident, saying that, even the consultancy part of the business, which has been a little bit flat through the last year, will pick up going forward. Not really sharing too many numbers, but on the margin front, they expect better than the 19% that they've done. And the mix should go back to 50-50 from the current 43 that we're seeing for consultancy versus 57 for turnkey. So that is the stock, by the way, also has done very well on Engineers India. If I look at just the 1-month move, it's up 30%. And if you see the 1-year move, it's done quite well, around 80% higher there. So with that, we're going to get into a short break. But when we come back, there's lots to discuss in the market that really remains top of mind. Rohit Srivastava will be with us.